Welcome to Season 2 of the Crypto Pulse podcast, your ultimate guide to the world of crypto, Bitcoin, and world economics. We're here to guide you through the crypto universe with thought-provoking topics, in-depth knowledge, and information to help you make informed decisions. We'll also be interviewing some of the best minds in the industry, such as CEOs of crypto projects, traders, economists, authors, and development teams from around the globe. And now for the episode.
Hello and welcome back to the Crypto Pulse podcast for another one of our epic weekly episodes about crypto and macroeconomics. That was take 3 of the intro. I'm really proud of myself.
That was brilliant. It won't be in the episode, but you opened with something that sounded reminiscent of the music they play at the start of movies in the cinema. It was that sort of like which I think we should actually include in every episode going forward. I thought that was quite fun.
I was warming up my vocal cords, and you know, as a musician and somebody that's worked in the music industry, you should respect my artistic quirks a little bit more.
I respect your process. Whatever you need to do to get yourself limber and ready.
I'm on my second coffee this morning. We've both had. I mean, the heat here in the UK has been ridiculous. We've both had
too much.
A bit of a week of it, and it's the heat's been really too much. So it's quite interesting because I've got some friends that you know out in Portugal looking to do a project out there. Loads of stuff going on there in the crypto community, so that'll be a fun episode to do out there at some point. But it's 45 degrees in central Portugal. 45 degrees. You could literally cook an egg on the house.
It's way too much. I mean, I'm a Welshman, and everybody, well, you know, people in the UK will know that the weather in Wales is a sort of standard 15 degrees sort of most of the summer.
You like rain and funny shaped balls, don't you?
Well, yeah, I just like it to be sort of, you know, anything above 25 degrees is way too much, sweltering. So yeah, we've been unfortunate to have sort of 35 degree heat in the house this week, and of course we don't have air conditioning units here because it's such a rare thing.
You're an environmentalist, aren't you? That's why.
Yeah, I mean, I could probably park that for an air conditioning unit this week, I'll be perfectly honest.
Yeah, you could run it off solar, I reckon.
For about 15 minutes. But yeah, it's fine. I think next week's looking a little cooler. But I guess the point is you have to excuse the brain fog.
Yeah, a little bit of brain fog. I tell you what though, like if you could harness solar energy to mine Bitcoin, you always talk to me about this Kardashev Scale and about how civilizations that manage to harness power develop. So maybe we could just start with that and what that is, because we've mentioned it a few times, but we've never really gone into any detail.
Yeah, absolutely. Let's talk about it. So yeah, we have talked about it a few times on the show. We touched upon it. And the Kardashev Scale is basically, it's a method of measuring a civilization's level of technological advancement based on the amount of energy that it's able to harness and the way that it harnesses that.
Digital
energy trapped in cyberspace. So it was, I think it was proposed by the Soviet astronomer Nikolai Kardashev, and I think it was in the 1960s. It's completely hypothetical, but he theorized that civilizations throughout the universe would only be able to develop and advance based on the way that they harness the energy sources that are available to them. So he says that there's a type 1, type 2, type 3, type 4, type 5 civilizations, so 5 levels on the scale. And humanity at the moment, I believe, are only a stage 1 civilization because the majority of our energy comes from burning up fossil fuels, and we're not predominantly using the energy from our sun. Sort of as you go up through the scale, your sort of energy efficiencies become better and more profound. Gotcha. And the idea for him was that as you sort of approach level 5, you would essentially be able to harness not just the energy from your own sun using something like a Dyson sphere, sort of like directly drawing energy from it, but you'd also have the ability to harness energy from other suns within your sort of galaxy. So
wow.
I mean, it's really sort of really interesting stuff. I actually saw something recently that was really, really fascinating, which was a grid drawn onto the state of Texas, which showed how big a space would be required if we were to power the entire world with solar.
I think I've seen this, but I think it was in Nevada, but it's probably the same thing. And I think Elon Musk has spoken about this as well, hasn't he?
Yeah. But the point of that was that actually it would be a very, very tiny area of landmass that would be required if we were to power everything with solar. Now, obviously, you've got the issue of then storing that energy, but
yes,
but the point is that actually, versus the amount of energy that our sun is kicking out constantly, we are harnessing something like 1/1,000,000 of a percentile of that energy. And if you look at what we've developed as a civilization based on just that energy alone, it's quite impressive. So it makes you wonder what might we be able to achieve with 99% energy efficiency from the sun. Could we terraform planets? Could we move planets throughout the solar system?
And what does that mean for Bitcoin? What does that mean for digital energy stored or trapped in cyberspace? That is...
I mean... that's a bonkers idea. Yeah, mining Bitcoin with a Dyson sphere on your local star.
Maybe when it gets really far into like the difficulty, like we've had like another few halvenings, that will have to happen, because obviously like you have the cost to generate the energy, and the cost to generate the energy in that scenario would be the research and development and the hardware and then the installation. But then after that, if you're harnessing that energy, I should think it's probably a lot cheaper to do something like that. And maybe Elon's idea is to like create something like that on Mars, and then he'd be able to mine various different cryptos. And at that point, you wouldn't have the environmentalists saying, well, I say environmentalists, mainly activists, saying that Bitcoin is bad for the environment because it's literally using energy directly from the sun that couldn't really be used for anything else particularly. And even if there'd be so much that it wouldn't be an issue. We wouldn't have a finite amount of energy available to be able to do what we need to do.
Absolutely. I mean, if we could harness, I think, even 1% of the sun's energy, we would have such an abundance of energy that it just wouldn't become a problem. You could power all cities. You could probably power, we could be multi-planetary with multiple cities on multiple planets and still not use 1% of the sun's energy. So yeah, I think those sort of eco credentials are really important for Bitcoin. But actually, I mean, a study was done and they've sort of proven beyond reasonable doubt now that Bitcoin does use more than 51% of Bitcoin network's energy usage is green, and it comes from trapped energy sources like hydro. Areas where energy can't be sold back into the grid and has essentially, it's either got to be used or it's lost. So yeah, there's definitely an incentive for Bitcoin miners to find areas where energy is cheap and abundant, and to that effect, I think they've done a good job.
Yeah, I mean, how much of the fiat monetary system is powered on renewables? It's really
the petrodollar.
Yeah, exactly. Took the words from my mouth there. Yeah. Yeah, interesting.
Yeah, it is. That was a nice little segue.
Yeah. Should we talk a little bit about the markets? What's been going on over the last week? We had some news out of the Fed, which was sort of unexpected, but nevertheless quite horrible. And we've had some other events go on in other parts of the world that people may not really know too much about, namely Sri Lanka. So maybe we can kick off with a bit of thoughts on the market and where things are going.
Yeah, it's been a really interesting week, as it always is in the crypto world, but specifically actually in macroeconomics. So we had the CPI announcement on Tuesday, I believe. Lots of analysts were expecting it to come in at around sort of 8.5% on the year. The actual figure turned out to be, I think it was 9.2, which is much higher than expected, and the highest inflation rate in, I think, 40 years. Which is really staggering for a country like America. So the CPI announcement came in on Tuesday at 9.2%. And as the markets do, they reacted pretty swiftly. Bitcoin dropped from around $19,800 to just below $19,000. I think it peaked peaked at, dipped down to about 18.8. But actually, I was sort of impressed with the way that it the way that it responded throughout the day. It sort of quickly recovered and actually closed the day at about 19.5. Looking at Bitcoin now, we're still sort of within that trading range that we kind of started in the middle of June. We haven't really had any kind of exciting action. This does look to me like it might be reaccumulation at these prices. Lots of people are expecting another major leg down as it looks to be potentially forming a bear pennant. I'm not 100% convinced, honestly. I think, typically when we're sort of in that bear market, people are always waiting and expecting for much lower prices. I would be very surprised if we get that dip down to the sort of 12K level. But I mean, if it did, what an opportunity to enter.
That would be good for buyers, right?
Yeah, absolutely. If we get there.
I was really impressed that we held 19K based upon just this terrible news out of the Fed and what's going on in the world. I mean, that was quite a miracle, I think. I honestly thought we'd see it break through. And when that red candle came down on the hourly, when the announcement happened, I thought, here we go, we're going to see a bit more of a capitulation here. But it didn't. There was a lot of buying support at that 19K level. And I think the reality is if you're buying and holding and your time horizon's 5 to 10 years, what a brilliant place to be buying. I mean, I don't think you're going to regret buying Bitcoin at 19K in 5 to 10 years time. So for me, it was just a case of buying a little bit more and putting it in the whole portfolio and forgetting about it.
Yeah, I think you're right. When the market's in these sort of downturn periods, people forget how quickly Bitcoin can move when it starts to move.
Yes.
Back in I think it was, let me just get my charts. End of 2020, when Bitcoin sort of started its first leg up to 40K, that happened really, really swiftly. It was sort of the move
fast.
Started in October, and we hit 40K then in January, which is only 4 months. And we reached then that sort of 63K point in April. So, yeah, I think it's just important to remember that when the price moves, it moves quickly. So when you're sort of looking for an entry point, I would typically be looking for a range. And I think sort of 20K down to sort of 15K is probably a good range to be accumulating. Any lower than that, and maybe hold off and see what happens. But I think, as we said, this is a really good buying opportunity.
Yeah, I don't think we'll see these prices in a couple of years' time. I mean, we've got the halvening in 24, and I would expect that the economy will be on some way to being repaired, albeit probably temporarily, and there'll be a little bit more confidence in the market. But for me, this is just the reverse of what we saw during the bull run, which is everyone's like, no, the prices are going to go higher, we're going to wait, it's going to probably go to 100K. And the reverse of that is true in a bear market. People are saying, yeah, it's going to go to 15K and 12K, and it might not. But, you've got to be prepared to make your own decisions and decide at what level you're comfortable with. And if you're going at a level of 19K and it loses 20%, then you need to just be comfortable with that in the short term. But the reality is, if you're listening to this show and you believe in Bitcoin and you believe in the philosophy of it and the fact that it's going to be adopted by probably more countries, probably more institutions, people are going to be having it in different funds, then there are only ever going to be 21 million of them. And, the law of economics say that the price has to go up when the demand goes up. And the demand right now is, I say it's low, but I was looking at the on-chain analysis, and it was quite incredible because there's a record number of Bitcoin going off exchanges into cold storage, which really does tell you something. And when you look at that on-chain analysis over several years, you can see that the bottom forms when people are starting to put those Bitcoins into cold storage rather than keeping them on exchange. And we saw the reverse during those capitulation phases. We had alerts saying that more and more ETH and BTC and other cryptos will go into exchanges for people to sell into stable coins or to cash out into fiat. So the on-chain analysis is good. the macroeconomic environment is shitty. And that's what makes me a little bit more nervous about buying large amounts at these prices, because that macro environment does impact things heavily, as we've seen. So overall, I think we're in a good spot for long-term hodlers anyway.
Yeah, definitely. It's interesting that you mentioned some of the on-chain analysis, because, you know, I hear people calling it voodoo and, you know, giving it a real bad rep, but actually it's useful for a couple of things. Definitely useful for seeing what type of buyers are currently buying.
Yes.
And of course, with Bitcoin, with it being a public ledger, you can see that information. And I think they call them shrimps. You know, you've got whales on one end, the people with the huge Bitcoin balances, but shrimps are the people with, you know, 1 Bitcoin and below. And the on-chain stuff suggests that actually they're buying like crazy at the moment. You know, the sort of general Joe public, the smaller investor, that they bought something at like a record sort of 600,000 Bitcoin last month alone, which is really staggering. And of course, there is, you know, for the general sort of retail investor, access to Bitcoin is relatively straightforward. We talk about sort of demand growing over the next 10 years, and that will happen. I think a lot of that will be driven by regulation for some of these funds, you know, like I speak to people that manage pension funds and hedge funds, and whilst they might have Bitcoin in their personal portfolios, there's absolutely no route for them to add it to a pension fund, for example, because there's just no framework for it. But I think that is coming. And when it does, you know, it'd be interesting to see how these sort of asset managers allocate capital to crypto.
It'll be really interesting. I mean, at the minute, you've kind of got the only other exposure you can have is to stocks that the companies hold Bitcoin, like MicroStrategy, for example. So if you've got MicroStrategy shares, you have exposure to BTC. It's like
Grayscale
almost. So, yeah, Grayscale. This thing's coming, and I think it will surprise us all. And at some point, the crypto market will decouple from things like the S&P 500 and the NASDAQ. So I believe anyway.
Yeah, that's it. I sort of like, I follow a lot of people on Twitter, and I sort of generally, I'll scroll through just to see what the general feeling of the space is. And there are lots of people that are wondering why their shitcoin isn't pumping. You know, we were promised that when this release was coming.
That's why.
Well, you know, I think there's more to it. You know, a lot of this is being driven by the macro environment at the moment, and it's not just your shitcoin that isn't pumping. It's crypto that's struggling as a whole, and broader than that is risk assets generally. You know, equities are suffering, gold is suffering. Interestingly, you know, the one sort of safe place that, you know, you consider to be, you know, where investors would move when we have high inflation, but actually, you know, gold has sort of underperformed. So,
well, it's underperformed for the last decade. I mean, that's just been a total non-event, really.
Yeah, totally. I mean, it sort of peaked out in March at like $2,000, and we're now down to sort of $1,700. I mean, gold is just not what it used to be. I think, you know, it's not scarce. I read something the other day. I can't remember the exact amount that was found, but it was a ludicrous amount of gold that was found.
It was in Africa somewhere, wasn't it? I want to say Zambia, but it probably wasn't.
Yeah, it was just a ludicrous amount of gold that was found. And, you know, people talk about gold as being a scarce asset, but it's really not. You know, I mean, the majority of gold that's owned is paper gold. People don't typically deal in physical gold. If you do have physical gold, it's really only good as a paperweight or for making jewelry.
It was Uganda. So Uganda announces discovery of huge gold deposits. Uganda has announced that it has struck a deposit of 31 million tons of gold ore with extractable pure gold estimated grows to 320,000 tons. Okay, that's absolutely enormous.
Interesting. Well, I wonder how quickly actors in the West will find a way to extract that,
claim ownership on it. You put it way more diplomatically than what was going through my head, for sure.
Well, we've seen that play out before, right? It doesn't matter if it's gold or oil or any other kind of natural resource. Typically, the US sort of leads the charge on getting that in their reserves.
I was talking to a friend of mine last night, and I gave him a book recommendation, which is essential reading to anybody that listens to this podcast, and it's called The New Confessions of a Economic Hitman. And it's an amazing book and talks a little bit about some of the tactics governments have used, specifically in the US, to stake a claim on other countries' resources. So I would highly recommend that. I'll tell you a little bit more about
what was the book?
It's called The New Confessions of an Economic Hitman.
Oh, I just read it. I just read that book.
Oh, really?
Yeah, it's totally fascinating.
Yeah,
it was good. It's about the guy that joined the I think he joined the Peace Corps, didn't he, to start with, and then he was headhunted to go and work for a consultancy firm that worked to sort of make these enormous loans to developing countries that sort of kept them sort of as like economic slaves to the IMF. I think that was kind of the premise of it. Yeah, it was fascinating. And of course, all of this stuff is completely true. We've seen America do this time and time again, and the IMF are, don't want to say anything too bad, but I mean, they're like the mafia. And of course, we saw this actually with El Salvador. El Salvador needed $1 billion. They wanted to put $1 billion into infrastructure. The IMF said, okay, absolutely fine, we'll loan you $1 billion. And the president of El Salvador said, no, we don't want your money. In fact, we're actually going to raise that money through a Bitcoin bond.
What a legend.
Yeah, total legend. And he did. He ended up raising $1 billion and sidestepped the IMF. And of course, the IMF went absolutely ballistic, really didn't like it, tried to exert some sort of pressure on El Salvador. But of course, El Salvador didn't buckle because they owed America nothing. So I think that's why Bitcoin is seen as dangerous, because you've got government bodies and the IMF who really have sort of given themselves this position of being sort of world leaders by loaning developing countries money, and it allows them to do all sorts of things. They can get the presidents to build infrastructure that uses only American contractors. This was something which is in the book that you just talked about.
Yes.
They'd loan $1 billion to a developing country and say, okay, but you've got to spend that on railways, and you can only build railways using this American company. So it's all very interesting, but I think Bitcoin allows individuals and countries the ability to sort of retain their sovereignty.
So if you've been listening to some previous episodes of the podcast recently, you'll have noticed that we've been featuring some of the projects being built on the Kadena ecosystem. And we're really pleased to get some of these incredible entrepreneurs on the show to talk about what they're building on one of our favorite blockchains and our favorite projects. And we've sort of made no apologies about sort of
championing them. I think we've
made no apologies about championing Kadena, and they've been kind enough to sponsor some content. So I think we're going to have up to 10 entrepreneurs and builders come on the show to talk about what they're creating on the Kadena blockchain. So if you guys are a little bit techie, there's some techie stuff in there. If you're interested more in some of the business stuff, there's loads of business stuff, because we ask the CEOs and founders lots of business related questions, and you get a flavor for some of the things that can be built on this blockchain and other blockchains as well. And we're really pleased to be doing that. So thank you to Kadena for providing us with that opportunity and to start talking to some really incredible, bright people building in this space.
Yeah, I also think it's fair to say that we ask some quite challenging questions. I think we try not to give our guests too much of an easy time. There are, rightly so, lots of questions that people want answered. And we had the guys coming on that were building an algorithmic stablecoin the other day, and we challenged them about that, because there's been a lot of negative news around stablecoins, and specifically algorithmic stablecoins with the Terra Luna collapse. And we put some difficult questions to the guys there, and they sort of gave us some really brilliant responses. So yeah, definitely tune into the shows. We're loving having these great guests on. But this week, there's actually been some really great announcements coming from the Cadena ecosystem. They just launched the X wallet, which is now available on Android and the Apple Store. I've downloaded it myself. I set it up. It's so straightforward. Great user experience. I would highly recommend taking a look if you've got any KDA that you want to take off and exchange. But also Cadex. Cadex also launched. So we interviewed the guys from there a couple of months back, and I know that they were working on some auditing, and the release date had been pushed back a little bit just because they wanted to, double and triple check that everything was good to go. So the DevNet has just gone live, and the feedback looks to be really, really positive. It looks beautiful as well, which is always good.
Yeah, super exciting. I think we'll have those guys back on the show probably later on in the year, actually, to talk about where they're up to with things. So yeah, thanks so much for tuning in once again. I hope you found this information entertaining and useful, and don't forget to follow us on Twitter at @crypto_pulse. So until next time, goodbye.
We hope you enjoyed this episode. It would mean the world to us if you could leave a review wherever you're listening. This really does help and allows other people to find us online. You can keep up to date with new releases of the podcast by subscribing and following us on Twitter or Instagram for the latest crypto-related news. Information provided by Crypto Pulse via this podcast, website, social media channels, and any other medium does not constitute financial advice, investment recommendations, or any other type of advice whatsoever. The Crypto Pulse team are not professional financial advisors. Trading and purchasing cryptocurrencies do carry risks, and anybody wishing to partake in such activities should seek professional advice.